A Mochi moment from Sadie, who writes, I'm not crying, you're crying. This is what I said during my first appointment with my physician at Mochi, because I didn't have to convince him I needed a GLP-1. He understood, and I felt supported, not judged. I came for the weight loss and stayed for the empathy. Thanks, Sadie. I'm Myra Ahmed, founder of Mochi Health. To find your Mochi moment, visit joinmochi.com.
Sadie is a Mochi member compensated for her story.
That DIY Headless Horseman costume you've been planning all year is on point. But is your DIY home security? Upgrade your safety game this season with ADT's DIY home security systems. They're reliable, easy to set up, and offer remote assistance if you need help. So while you're out winning that costume contest, ADT will have things covered at home. Just remember, when the lights go off, the alarm should go on. Visit ADT.com or call 1-800-ADT-ASAP. When every second counts, count on ADT.
Welcome back to another episode of Investies. I'm your host, Linda Garcia, Texas State Representative and author of the book Wealth Warrior. This week on the podcast, we're going to be talking about the power of free markets and how the Trump administration could potentially be driving us towards socialism. But before we get into that, let's go ahead and discuss how the markets performed last week and some data that we received on inflation. The stock market has now made a full recovery since its drop a couple of weeks ago, and all three indexes have now reached a new all-time high. The Dow increased 2.2% last week. The S&P 500 increased 1.85% last week, and the Nasdaq increased 2.42% last week. If we take a look at the total increase from the low on October 10th, after Trump made his remarks on Truth Social that drove the market down, we are looking at a pretty significant increase in just 11 trading days. The Dow increased by 4.32%, the S&P 500 increased by 4.59%, and the Nasdaq increased by 6.03%. This is significant growth. I know sometimes that this can distort our perception, especially when we're new to the market and we're looking at single digits like these. But I'd like to remind everyone that on an annual basis, the Dow Jones and the S&P 500 average anywhere from 5 to 8% growth. If we're looking at the Nasdaq, it can average anywhere from 5 to 10% in growth. And so to have a recovery like this in just 11 trading days is a really big deal. And it also is a strong reminder of why we should participate. Not to mention that you should definitely compare these numbers to what your savings account is giving you on a rate of return. As I was saying that, I was curious to see what the recovery has been since April 7th, since the crash that we had in the market. And honestly, I am pretty shocked. I want to share these numbers with you. The Dow has increased 25.94%. The S&P 500 has increased 37.5%. And the Nasdaq has increased 54.31%. I'm like in shock. I don't even know what to say here. We're looking at a basket of stocks. We aren't even looking at individual stocks. If we started to look at individual stocks, I think I would be extremely shocked to see how much the recovery has been since that April 7th low that we experienced. All right, switching gears here just a little bit, I want to talk about one of the catalysts that we had for last week's recovery. The market seems to be very certain that Fed Chair Powell is going to decrease interest rates. Why? Well, that's because we got CPI data. Despite the government shutdown, we in fact did receive CPI data. This is the only data that is allowed to be released. This is because the government relies on this data to distribute Social Security checks based on the cost of living. As a reminder, CPI stands for Consumer Price Index. This measures the change in prices paid for goods and services over a period of time. In other words, it measures inflation experienced by us as consumers. While CPI did come in lower than analysts expected, it is still higher from the month prior, and it is still higher on an annual basis. So the Fed's target is 2%. Unfortunately, we are experiencing an increase of 3% a year. It's also really important for us to understand that even though the CPI data is a lot lower than what it was, let's say, a few years ago, just because CPI data is coming down, that doesn't mean that the prices of groceries have come down from a couple of years ago. It just means that we aren't increasing at the rate that we once were. So as of this month, we are increasing at 3% a year. Now, why does the market like the fact that we are increasing in CPI? Well, this is because it ensures that Fed Chair Powell has to do something about it, and part of that is decreasing interest rates. When we decrease interest rates, we make money more affordable. And making money more affordable means people will borrow more money, whether it's to buy houses or to buy stock, and it brings more liquidity to the market. Yes, people do borrow money to invest in the stock market. And here we are, unfortunately, wondering whether or not we should be investing. This is because resources and education pertaining to the stock market has been kept away or inaccessible. Let's get into what I want to discuss this week. Are free markets in danger? And is Trump driving us towards socialism?
I turned off news altogether.
I hate to say it, but I don't trust much of anything.
It's the rage bait.
It feels like it's trying to divide people.
If we got clear facts, maybe we could calm down a little.
NBC News brings you clear reporting. Let's meet at the facts. Let's move forward from there. NBC News, reporting for America.
This episode is brought to you by LinkedIn. Healthcare professionals can lead their careers with LinkedIn. Discover jobs by specialty, preferred shifts, and even desired salary. From mental health therapists to radiology technicians, it's now faster and easier for healthcare professionals to find the right fit. Learn more at linkedin.com/healthcare. Side effects may include faster job placement, improved work-life balance, and increased career satisfaction.
Something I have been unpacking for over 4 weeks over on Patreon. By the way, patreon.com/investies for daily economic updates, a place where I unpack trends that I'm seeing. One trend that I feel like I'm talking about at least once a week is the Trump administration purchasing private or publicly traded companies. We aren't talking about this. I don't understand why we are not talking about this. I don't understand why I'm not seeing articles about this. When I asked ChatGPT if it is common for the presidential administration to take a stake in private or publicly traded companies, by the way, I know the answer to this, but I wanted to see what ChatGPT says. It said it's not normal or common for the White House or a presidential administration to directly hold stakes in private or public companies. There are usually a lot of ethics, rules, and legal barriers to prevent that kind of direct financial involvement, mainly to avoid conflicts of interest. The president or the White House directly taking a stake is generally a no-go. In researching how many companies the Trump administration took a stake in, it triggered a memory for me. Do you all remember Occupy Wall Street and when President Obama bailed out the banks and how upset people were? I want to share with you all what actually took place during that time because the Obama administration didn't just give the banks free money. Now, I want to be very clear. Obama was actually the first president to take a stake in publicly traded companies. In other words, he didn't give the banks free money. He actually had the government take a stake in the banks like Citigroup and Bank of America, and it was set to be a short-term investment. Once the banks were stabilized, the banks had to pay that money back to the administration, and the administration would sell out of their position. And they did. So at that point, the Obama administration, the government, no longer had a position with any publicly traded companies. And I also think it's important for us to critically think through what would have happened had Obama not invested in these publicly traded companies until they stabilized. It wouldn't have necessarily impacted the executives. The people who truly would have been impacted is us, the people. And so we would have seen an entire collapse. Remember the Great Depression, which led to a series of bank runs? Yeah, so there's that. Here is a list of the companies that the Trump administration has agreed to take a stake in, as well as the percent of the stake. First up, we have Intel Corporation. Many of us know about Intel. It is a US-based chip maker primarily focused on CPUs, GPUs, and semiconductor manufacturing. The US has agreed to a 10% stake in this company. MP Materials Corporation, this is a U.S. rare earth minerals company, mining and processing critical magnet materials for the defense industry. The U.S. has agreed to take a stake of 15% in that company. Then we have Lithium Americas Corporation, a lithium mining and project development company important to the EV battery supply chain. The U.S. government will take a 5% stake in that company, as well as 5% stake in its joint venture mine. Trilogy Metals Inc., a Canadian-listed mining exploration company with significant Alaska minerals. The U.S. government will take a 10% stake and has warrants to purchase an additional 7.5%. It is also currently in communications with IonQ, which is a based quantum hardware and software company developing trapped ion quantum computers and associated software ecosystems, and Rigetti Computing, Inc., which is a quantum computing company developing superconducting quantum integrated circuits and offering quantum algorithms via its Forest Cloud platform. So we have 4 companies that he has officially entered an agreement with. All 4 of those companies are publicly traded, and then it feels like almost every week I'm reporting on some new company that he has entered into a deal with. I want to talk to you about what it means to hold a 10 to 15% stake in a publicly traded company. Now, this is considered a significant ownership position. This is large enough to influence corporate direction, trigger regulatory oversight, and indicate strategic interest. Once someone, including an individual, corporation, or government, owns 10% of a publicly traded company, this typically gives them voting shares, and they are now considered an insider by the SEC. While they don't have full control of the company, the shareholder does become a major voice in corporate governance, often gaining leverage in strategic decisions, executive appointments, or long-term direction. While that amount does sound small and potentially insignificant, it does actually perceive real or shadow control. Even without majority ownership, this level of stake may intimidate competitors, influence corporate policies, or create public perception that the stakeholder has a deeper sway than officially acknowledged. To help you better understand the importance of a stakeholder that has 10% or more, one of the greatest investors, Warren Buffett, does not like to purchase 10% or more. He prefers to stay between 5% or under 10%. He has stated before that his philosophy is to be a quote-unquote forever partner, not a controller. His strategy is to trust great management teams, hold long-term, and benefit from compounding, not to micromanage. So this kind of gives you an idea of how powerful a 10% or more stake has in a publicly traded company. Now, I do want to caveat this by saying that in very rare occasions, he has taken a 10% stake or more. This is after a long period of time and when he truly believes that he wants to contribute to the direction of the company. But again, this is rare. Now, let's move on to the risks of a government owning stakes in publicly traded companies. I do have a relatively long list of concerns here. Now, I want to be completely transparent. One of the ways that I use ChatGPT is to unpack certain thoughts that I have. I typically will open up a project and begin communication with my ChatGPT to unpack what I am currently seeing. One of those projects, of course, I would say about 2 months ago was the purchase of publicly traded companies by the Trump administration. And so in having these conversations with ChatGPT, I started to discuss my concerns, and then I asked ChatGPT what their concerns were. And so together we have compiled a relatively long list. Now, we have broken them up into different categories, 4 categories to be precise. The first category, market and competition risks. Second category, economic and investment risks. Third category, corporate governance and strategy risks. And fourth category, democratic, social, and geopolitical risks. In our first category, market and competition risks, we have concern number 1, reduced competition. When the government backs a company financially or politically, rivals may feel they're competing on uneven ground. That can discourage new entrants and weaken the competitive pressure that normally drives better products, innovation, and pricing. Number 2, distorted resource allocation. Instead of capital flowing to the most efficient or innovative companies, it gets redirected to industries or firms chosen for political reasons. This can create economic imbalances and slow overall productivity. Number 3, inefficiency and lower performance. Government-backed companies may face the same urgency to cut waste or improve performance because they know they're protected. Over time, this often results in bloated operations and sluggish decision-making. Number 4, decline in entrepreneurship and innovation. If government-funded companies dominate a market, smaller startups may feel they can't compete fairly. That fear can stifle entrepreneurial spirit and reduce breakthrough innovations that typically come from smaller, agile players. Number 5, price distortions. When governments influence pricing directly or indirectly, prices may stop reflecting true supply and demand. This can cause shortages, surpluses, or long-term market instability. Really quickly, I want to talk to you about how we are already seeing the effects of that taking place. These publicly traded companies are increasing in value only on the news that the government has entered in a contract with these publicly traded companies. There truly is no merit, meaning there has been no changes in the fundamentals of this company, just that the catalyst is that the government has entered in contract with them. So we are already seeing the implications. Here's where I think people need to be extremely careful if they are in fact investing into these companies just because the Trump administration is now invested. I want you to think about what's going to take place down the line when the administration changes and no longer wants to invest into these companies. When Trump has a falling out or a disagreement with one of the CEOs. We saw this already with Trump and Elon Musk. As soon as that relationship started, that is when I decided to sell a tranche, a pretty significant tranche of my investment in that company because I knew that this would result in some sort of conflict or breakup. And that is, in fact, what we saw. Moving on to category number 2, economic and investment risks. Number 6, reduced foreign investment confidence. Foreign investors may see the government-owned market as politically risky or interventionist. That perception can lead to reduced foreign capital, harming growth and global competitiveness. Now, we did start to see this in early 2020 and into now 2025, where we had concerns with China and a lot of money was pulled out of Chinese publicly traded companies. We could start to see the same thing happen here to the United States. Number 7, moral hazard, taxpayer risk exposure. Government-backed firms may take bigger risks, assuming they'll be rescued if things go wrong. When those risks fail, the burden often shifts to taxpayers. Number 8, slower economic growth. As market dynamism fades and innovation slows, economic growth may suffer. A state-influenced market often becomes reactionary rather than forward-looking. And number 9 in this category, risk of gradual nationalization. Small stakes can normalize state ownership and pave the way for deeper control, especially during crisis. What begins as temporary involvement can evolve into permanent government dominance. Category number 3, corporate governance and strategy risks. Number 10, politicized decision-making. Corporate strategies may start to align with political agendas rather than long-term business health. Decisions may be influenced by election cycles instead of innovation cycles. Number 11, instability from shifting political priorities. Every new administration may push different directives, forcing companies to shift strategies constantly. This creates instability and undermines long-term planning, especially in technology-heavy sectors, which is what you are seeing him mostly take interest in. Number 12, government as both referee and player. When the state regulates the market while also owning part of it, it creates a fundamental conflict of interests. Public trust in regulatory fairness can erode quickly. Number 13, mission creep into multiple sectors. Once the government successfully takes stakes in one industry, expanding into others becomes easier politically. Are you all listening to this? I know it's long, but I think it is so important for us to pay attention to what is happening here. Over time, this can transform free market into a semi-planned economy.
This episode is brought to you by Netflix. New players, new games, new rules. Squid Game, The Challenge returns for a gripping second season. 456 contestants from all walks of life, competing in the ultimate test of strategy, alliances, and endurance. For a life-changing prize of $4.56 million. With stakes this high, why make friends when you can make millions? Watch Squid Game, The Challenge Season 2, only on Netflix November 4th.
This podcast is brought to you by Carvana. Carvana lets you buy your next car on your terms. Explore a massive inventory online, filter for what matters, and find your perfect match. Then choose delivery to your home or pick it up at one of Carvana's iconic car vending machines. Every car also comes with a 7-day money-back guarantee, so you can make sure it's the right fit. Buy your car on Carvana. Delivery or pickup fees may apply. Limitations and exclusions may apply. See our 7-day return policy at Carvana.com.
Carvana.
Moving into the last category number 4, democratic, social, and geopolitical risks. Number 14, favoritism toward political bases. Government stake decisions may increasingly benefit politically important regions or voting blocs. This deepens regionally inequality and fuels distrust among citizens and businesses not favored by the state. Number 15, public backlash and erosion of trust. If government-owned companies underperform or require bailouts, taxpayers may feel exploited. Public frustration can lead to distrust in both institutions and the financial system. Number 16, international trade retaliation and global perception. Other countries may view government-backed companies as unfairly advantaged, similar to how China's state capitalism is criticized. Hello? Oh my gosh. This can lead to tariffs, trade disputes, or reputational damage in global markets. That was the list of risks that I worked on in collaboration with ChatGPT. I had identified a list of 7 risks. I asked ChatGPT what risks it saw. We consolidated lists. It had 9 more risks to add to the risks that I identified. It's really important for me to communicate that, in case it wasn't clear before, I am a capitalist. I want to protect free markets. I think capitalism is the foundation of the United States of America and what makes the United States of America a great country. I know that right now we are going through challenges and it certainly does not feel like a great country. But when we actually compare it to other countries, in the access and the resources that we have, it is the best performing country. And also, it's true that it is fucking shitty at times. It's shitty right now. I realize that in my community, saying that I am a capitalist is not the popular thing to say. We are watching our communities move closer to socialism and away from capitalism. And I empathize with that. I understand it. We have not been given the resources and the tools and the education to participate in the creation of capitalism. We have been kept consumers of the free markets. And so, yes, we are getting the short end of the stick. But we also have the liberty and the freedom to educate ourselves on how to get started and how to participate. It's how I got started, and I'm doing my best to educate my community on how they can get started. I understand that it is not easy, but I also want to be very clear about what I am even doing in the United States of America. Both my father and mother, immigrants from another country, from Mexico, came here in order to participate in the freedom that capitalism provides. They came to this country and they participated in the economic growth that we are allowed to participate in without the government interfering. Yes, my mom cleaned houses for a living. And when she came to this country, the government didn't prohibit her clients from not hiring her to clean their house. The government didn't prohibit my mother from registering a DBA so that she could conduct business as an entrepreneur. She had that ability because we live in a free market. The government doesn't determine who we use to clean our pools, who we use to construct our houses, who we use to cut our grass, who we use to take care of our children. We have the freedom to create those businesses and to use those businesses. With that being said, of course, I have to acknowledge the issues that we are currently facing as this administration takes away the people that provide these services. And we are seeing the implications, and we will continue to see the implications. And I have full faith that when another administration takes over, this will be reversed. And this will be one of the things that goes down in history for being shameful in the way we've conducted ourselves. The United States of America, the American dream, the government, the school system, the health industry, it is all deteriorating. But we still have the privilege to participate in free markets, unless free markets no longer exist. And when I started working and unpacking on these ideas with ChatGPT, I asked it what I felt was a very important question. Is this closer to communism or is this closer to socialism? Because what we need to understand is that list of 16 risks is the reason I am a capitalist. What is at risk is the very reason why I think capitalism is an important structure. As it stands right now, these steps to have stakes as a government in publicly traded companies is closer to socialism. The idea that the state owns and regulates key industries to promote more equality or public welfare. But we see when we look at the risks, the dangers that this can actually promote here in the United States. Communism is a step further on that spectrum, where ideally the state owns all means of production outright. But when we're talking just about the government owning or running certain industries within a generally market-based economy, that is closer to a socialist approach. And I just find it interesting that this administration is painting socialism as a huge monster as it takes steps towards socialism. And nobody is highlighting this. Nobody is talking about it. Nobody is watching. I'm so frustrated right now. I also want to say that I do think that we need to remove capitalism from the health industry and we need to remove capitalism from education. I do think that capitalizing on those two sectors have been detrimental to our country and, of course, our health. I want to say that. Last thing I want to say is I hope Zoran Mandami wins. Okay, I know this episode got really passionate. There's a lot here to unpack, and I hope that we continue to have the conversation, a safe space here on Investies. If you appreciate the work that goes into producing these episodes week after week, I'd like to ask you for a huge favor. We have hundreds of listeners every single week, and yet our ratings on the podcast do not reflect that. I'd like to ask you to please take 5 minutes of your time wherever you listen to this podcast, rate and review it. Thank you so much. This small token of appreciation amplifies the podcast. This is Investies, a Cosmic Standard production. I'm your host, Linda Garcia. A special thank you to the team, Eliza Smith, Asia Simpson, and Jacob Winnick.